You know what's wild? Right now, thousands of XRP investors across America are looking at their portfolio, seeing red, and thinking about giving up. And at the exact same time, the people with the most money in this market are quietly doing the complete opposite. They're buying. And today I'm going to show you exactly why. Because there is something building underneath XRP right now that most people are completely missing. And if you miss this window, you are going to look back 6 months from now and wish you had paid attention today. Let's talk about it. XRP is currently trading around $1.10 to $1.13. Now on the surface that sounds painful, and honestly, it is. We dropped to as low as $1.08 earlier this week, which is a 19-month low. The broader market has been brutal. Bitcoin has been struggling around $61,000 to $63,000. The total crypto market cap has shed hundreds of billions of dollars in just days. Over $1.76 billion in leveraged positions got wiped out in 24 hours alone. So yes, the pain is real. Nobody is pretending otherwise. But here's the question that actually matters. Is this the end of the XRP story, or is this the exact moment before the next chapter begins? Because if you look at what is happening underneath the price, the signals that institutional investors actually watch, the picture looks very different from what the headlines are showing you. XRP-focused investment funds brought in $132 million in fresh inflows during May. That is while the price was dropping. Smart money does not pour $132 million into something they believe is dying. They pour $132 million into something they believe is about to move, and they want to be positioned before it does. Exchange supply of XRP is also hitting multi-year lows. That means less XRP is sitting on exchanges available to be sold. When supply on exchanges drops and institutional buying increases at the same time, that combination has historically set up some of the most explosive price moves in XRP's history. So let me ask you this. If the price is falling but institutions are buying and supply is shrinking, who do you think is going to be right? The retail investors selling in panic, or the funds allocating hundreds of millions of dollars? Welcome to XRP Verified. I'm glad you're here. If you want honest, data-driven XRP analysis every single day, built specifically for US investors, hit subscribe right now and turn on notifications. Let's get into the full breakdown. All right, let's talk about what is actually happening with XRP right now, the chart, the key levels, and what you need to be watching. XRP just broke below the $1.25 support level on June 2nd, and this was not a slow, quiet move. Volume surged massively that session, over 205 million units traded, which tells you sellers were aggressive and in control in that moment. From there, we dropped to the 1.08 area before getting a modest bounce back to where we are now, around $1.10 to $1.13. Here is what is interesting though. The RSI, which stands for Relative Strength Index, a momentum tool used by professional traders, has dropped to around 27 to 29. Anything below 30 is considered oversold. The stochastic oscillator, which is another momentum indicator traders use, is also deep in oversold territory right now. Now here is what oversold actually means in plain English. It means XRP is being sold more aggressively than the fundamentals actually justify. It means emotional panic selling has taken over from rational decision-making. And historically, not always, but consistently, these are the exact conditions where sharp reversals and relief rallies begin. I want to be very clear. Oversold does not mean the bottom is guaranteed right here. It means the selling pressure is becoming stretched and exhausted. The rubber band is being pulled very tight. Now let's talk about the specific price levels that matter most right now. The first level is $1.05 to $1.10. This is the current zone XRP is sitting in, and the immediate support the market needs to hold. This range has attracted buyers historically. As long as buyers defend this area, the picture stays constructive. The second level is $1.20. This is a key near-term target. A clean move back above $1.20 and the ability to hold it would signal that the worst of the selling pressure may be passing. The third level is $1.35. This is where the first real test for recovery begins. XRP needs to close above $1.35 with solid buying volume to show that the trend has genuinely shifted. Below this level, sellers still have the upper hand. The fourth level is $1.45 and above. Reclaiming this zone would represent a meaningful recovery and would likely flip short-term sentiment from bearish to cautiously bullish. This is the level that would get analysts talking about a real bounce. And for longer-term holders, if the right catalysts align, analysts are projecting XRP could recover toward the $1.65 range and potentially push toward the $2.20 area, where XRP was trading earlier this year at its 2026 highs. But those bigger targets come after the foundation is rebuilt. And right now, the foundation is being built right here, at these low prices, by patient holders and smart institutional buyers. Now let me explain something that I think is one of the most important concepts for any XRP investor to understand right now. And it comes directly from the chart setup we are seeing. XRP spent several months earlier this year consolidating in a range. During consolidation, the price coils up like a spring being compressed. Buyers and sellers fight for control. Volume dries up. It looks boring and frustrating. And then, when the consolidation ends, the move that follows is often dramatic and fast. Right now, we are not in that boring consolidation phase. We are in a fear-driven sell-off that has pushed price into technically oversold territory. But here is what often happens after fear-driven sell-offs, especially in assets with strong fundamentals and real institutional backing. The selling exhausts itself. Volume starts to dry up on the downside. Then a small piece of positive news, or even just the absence of more bad news, triggers a sharp bounce. And the people who are patient enough to hold through the fear end up being extremely well positioned. This is not me guaranteeing anything. This is just pattern recognition from what has happened in XRP's history and in markets broadly. The people who bought XRP at the bottom of the 2022 bear market or during the COVID crash in 2020, they were not the ones making headlines. They were just quietly patient while everyone else panicked. Now let's talk about the three major catalysts that are building in the background right now. The reasons smart money is positioning in XRP even while the price is under pressure. The first catalyst is the Clarity Act. This is the most significant piece of crypto legislation ever introduced in the United States. And here is where things stand. It just cleared its biggest procedural hurdle in Congress. The White House has now put a specific date on moving this bill forward, July 4th, 2026. What does the Clarity Act actually mean for XRP? It creates a clear legal definition for digital assets. It removes the years of regulatory ambiguity that has kept major U.S. institutions on the sidelines. Right now, large financial institutions, banks, pension funds, hedge funds, cannot fully invest in XRP because of regulatory uncertainty. The Clarity Act changes that. If it passes, the floodgates open for institutional capital to enter XRP legally and at scale. This is not a small deal. This is potentially the single biggest catalyst for XRP in its entire history. The second catalyst is the XRP Spot ETF. The SEC is currently reviewing pending XRP Spot ETF applications. Remember what happened when Bitcoin's Spot ETF got approved in early 2024? Billions of dollars flooded into Bitcoin almost overnight. Institutions that previously could not or would not buy Bitcoin directly were suddenly able to access it through an ETF in their regular brokerage account. XRP is next in line for the same treatment. And when, not if, but when, an XRP Spot ETF gets approved, we could see institutional demand that completely transforms the supply and demand picture for this asset. Analysts are suggesting that if institutional inflows match even a fraction of what Bitcoin ETFs saw, XRP could push back toward $2.20, and a stretch target of $3 becomes realistic. The third catalyst is the XRP ledger itself. Ripple just launched version 3.2.0 of the XRP ledger, a significant technical upgrade that improves network efficiency and reduces memory usage for the node operators that run the network. They also have an on-chain institutional lending protocol coming mid-2026, enabling fixed-term lending for large institutions directly on the XRP network. And Ripple has published a quantum resistance roadmap covering 2026 through 2028, which positions the XRP ledger as future-proof against next-generation computing threats. Here is the core point. While the price is down, the technology is being actively built and upgraded. The people building XRP are not sitting around panicking about the short-term price. They are shipping code, upgrading the network, and building institutional tools. That is what a project with a real future looks like. Let me give you my honest take, because that is what this channel is about. No hype, no sugarcoating, just the truth. The short-term picture for XRP is still fragile. If XRP loses the 1.05 to 1.10 support zone on a sustained basis, we could see a test of the 1.00 psychological level. That would be painful for short-term holders. I'm not going to pretend that is not possible. The macro environment is also not helping right now. The Federal Reserve is expected to hold rates high with nearly a 69% probability of zero rate cuts in 2026. When rates stay high, risk assets like crypto face headwinds. That is just reality. But, and this is a big but, every single major catalyst for XRP is either happening right now or approaching fast. The Clarity Act is moving toward a July 4th target. The ETF decision is on the table. The network is being upgraded. Institutional inflows are continuing even as retail investors sell. The people holding 100 XRP, 500 XRP, 1,000 XRP right now, they are not holding for today's price. They are holding because they believe they are positioned ahead of a much larger move that has not happened yet. And the data supports that belief more strongly today than it did 6 months ago. Patience in crypto is not passive. It is a strategic decision based on fundamentals, catalysts, and understanding where you are in a cycle. And right now, if the data is right, we are in the accumulation phase that comes right before the next expansion. Let's close it out with your full update for today. XRP is trading around $1.10 to $1.13, sitting in oversold territory with the RSI near 27 to 29. The key support zone is $1.05 to $1.10. Losing that zone could bring the $1 level into play. For recovery, the first target is $1.20, then $1.35, then $1.45, and each level requires strong buying volume to confirm. The big picture has not changed. The Clarity Act is targeting July 4th for advancement in Congress. XRP spot ETF applications are actively being reviewed by the SEC. Ripple just upgraded the XRP ledger to version 3.2.0 with institutional lending features on the way. And $132 million in institutional inflows came into XRP funds in May alone, while the price was falling. The market is testing your patience right now. It does that. But the assets that survive these tests and have the fundamentals to back them up are the ones that deliver the biggest rewards on the other side. Stay informed, stay patient, and do not make emotional decisions with your money. If today's update helped you understand what is actually happening with XRP right now, hit that like button. It genuinely helps this channel grow and reach more XRP holders who need this kind of honest analysis. And if you are not subscribed yet, do it right now and hit the bell so you catch every daily update. I'll see you tomorrow. Stay sharp, stay patient, and as always, stay verified.